Yo, I don't. It doesn't look like this is streaming on Twitter. It's supposed to be. It's weird. Usually, let me just share my screen. It's just on a delay. Yeah, I did a couple trades this morning. I just want to step through them, why I did them. So I did 3 trades this morning. I actually bought some IBIT puts. I bought gold puts, and I sold XHB, and I sold XHB puts. So I'm going to step through what I did and why. So I'll start with the XHB, which is what I sold. So XHB vol looks, so XHB vol is super jacked. Market was down, vol was up a little bit. And this thing, remember this chart here, this is your IV percentile is on the x-axis. By the way, this is just like just a few of the tickers. This is just stuff I have my eye on. So it's not the whole market. And then I keep SPY here just for frame of reference. So you can see SPY vol is super elevated. If I put the whole list of tickers here, the whole market's IVs are obviously elevated. And this, again, the steepness hasn't changed a whole lot in the last couple days. Basically what it's saying is that your 6-month vols are at about a 13% discount to your 1-month vols. And that's, you expect inverted term structure when vols are really high. So I just kind of put SPY there to have a sense of how steep SPY is. So, it's IVs 99th percentile for the last. This is the look backs are. This is just a year, and then your term structure is inverted, of course, and a lot of names kind of follow the same pattern here, right? So XHB vol is pumped up, and the term structure is descending a little bit more than the average stock that's in this list right here, and then sort of in line with SPY. So, but the thing so why sell XHB and not one of these other names, right? Like, if I want to sell vol, well, first of all, the steps are like this. I want to sell vol. I'd rather sell the fronts because the fronts are elevated relative to the backs, and that elevation is sort of in line. Then it's not. It doesn't stand out as that steepness doesn't stand out as extreme. I mean, it's similar to SPY. So I want to sell the fronts. Why do I want to sell the fronts? So that's where we got to go here to. So this is the list of all the vols that are high over here, right? But then if we look here, I show you this other screen. Show you this guy. So that first page just tells us is the vol's high and the term structure is steep, or it's descending or ascending. But then this page here is going to tell you how the vol looks compared to how you're moving to the VRP. Basically, that's the x-axis here, so, or the y-axis. The x-axis is like your 30-day vol percentile. So you find XHB up here, right? So XHB 30-day realized vol percentile over the last several years, it's in the 74th percentile. Basically means that the 30-day realized vol, looking back several years, is in the 74th percentile of 30-day realized vol samples. And then your implied vol is even way above that, right? Your 1-month implied vol is even much higher than that. So that's why you're getting this VRP that's like way up here. So it's a high vol and it's carrying really poorly, and it's already realizing quite a bit. So it just feels like the wind's at your back for this to be a short. I also I have some room to buy. So what I did is I actually sold uh, 50 delta puts, and these are March 50 delta puts, so expiring next week. And I had some, and I chose that. I'm not going to delta hedge them. I have room to buy delta. I'm basically not that long the market, so uh, I have room to buy delta. So I sold XHP puts, and so that was the reasoning behind that trade. A little discussion about execution. So I sold these puts. Stock was they were the March 96s. The stock was 95.30 at the time. Right now, the stock is up 80 cents since I sold those puts. The puts are down. Sorry, I'm looking at my IB here, which I'm not going to put on the screen. There's personal stuff on there, and I'm not too new school like all those Reddit kids. So these puts, let me see what these puts are doing. All right, so mid on these puts is about 207, 208, 209. So the puts are down about 45 cents since I sold them. Stock's up, call it 80 cents, and these things are down 45 cents. So about 40 cents of it is delta. So 40 cents of it was directional edge, and then there's another nickel in there that I made in excess of the delta P&L. So that nickel, a nickel's the vega of these options actually. So the vol's in a point. So that's how to look pretty quickly, like how did you do sort of on the trade. So by the way I sent that order in IB was I actually sent a vol order. So I got filled pretty close to mid. There's you can send vol orders in IB where I just basically look at the vols in IV, and then it uses that. One thing you got to be careful about that is probably just the decay schedule. Like, over time, the option, you're kind of trusting IB's decay model, but I guess if you're trusting their IV, that's fine too. And a penny one way or the other, it's not a professional setting here, right? So it's probably about as good as I can do. I need to dive into execution stuff a bit more. But anyway, I sent the vol order, got filled mid on these, and I sent the vol order because the option did have a high delta. So I wanted to at least try to minimize getting picked off. Okay. So the other trades. Let's go back to gold and IBIT. I bought puts in both of those, so I'm going to share something else. And go back to the first screen again. All right, let's do IBIT. So IBIT's vol is relatively low compared to these other things. It's in the this is the 1 month vol, by the way, and the vol is low, and the term structure is actually flat. Remember, this is 100 means the term structure is pretty flat. So your 1 month, 6 month vol spread is pretty flat in IBIT, and the vol is low. So when I see a term structure, now the term structure is like flat is feels relatively ascending compared to the rest of the market, right? Where everything's descending, but the vol is low and you have a flat term structure here. So I don't want to get fooled by the fact that it looks high on this thing, because at the end of the day, it's like relatively low vol in the market, and you're getting a flat term structure. So I would rather take the longer dated option in this case. And here, what I'm doing is I'm just buying teeny puts, because I've been in this range right here. I'm getting longer IBIT delta because I'm short some in the money puts that are decaying, and the market's down a little bit today. So market's down. I'm short Friday puts. So I'm getting longer IBIT, which is fine. I want to be getting longer Bitcoin in here. But I also, like I said, I don't want to, if Bitcoin takes a dirt nap, I don't want to, I want to be out. So I've been buying these back month, or I've been buying puts against it. So I own some April, I own some April teeny puts. I just bought these August puts because of this. So getting longer IBIT and doing it while, buying some insurance on the downside. And today I picked August because they're out there. Execution wise, these I got pretty whacked on. Like I bid, I had a resting bid out there, got hit, of course, as the market rallied. They're low delta put. They're only 10 delta puts. But if we look, IBIT was, we'll do the same analysis, right? IBIT is up about 40 cents since I bought the puts. And the puts are marked, and I've lost, looks like I've lost about 6 to 7 cents on 40 cents. And because they're 10 delta, I would expect to only lose 4 cents on these puts on a 40-cent rally, and I've lost like 6 cents. So I've gotten beaten up on the execution on these. And if I look, I'm going to look real quick to see what the vega of those puts are. Sorry, I'm just looking at IB to see if I can see the vega of these things. Yeah, so I lost a little bit, about 0.8 of a vol on these, according to this. So I lost about 0.8 of a vol point on, these, the vega of these is, looks like 2.5 cents. I lost 2 cents. So I lost 0.8 of a vols on these. So made a vol point on the XHBs, lost 0.8 of a vol on the IBIT puts. And then the last thing I bought was, also the other thing about IBIT, if I go here and I show you, this guy. So IBIT is, down here. So another reason, why did I buy those puts? Now the term structure is very descending. So you can see why did I go out to August? I'm sorry, it's not the term structure. I already explained that before. But the realized vol percentile, the realized vol percentile is elevated, but it's actually realizing pretty good. So the implied vol is, it's not surprising that the implied vol can be below the realized vol when vols get a little elevated. But we said before, the vols are not that elevated relatively for Bitcoin, and the realized vol is quite high, and you're getting your VRP. You're not even paying a premium VRP at the moment. Granted, you're buying the August teeny puts. Like, it's not gonna, like, the VRP and the theta versus the gamma is not a big consideration on an option like this, right? The option doesn't have a whole lot of gamma. I mean, this is just gunpowder. So it's, it'll pick up Greeks if something crazy happens, but the Greeks are not a huge consideration right now. And then the last trade, this one was just, this is major me just just taking a shot on, in the event that gold has gold's been rallying quite a bit, and if you get a snapback and everything, gold's had a nice rally. Gold's implied vol is like in the mid 15%. It's got a positive VR. It does have a positive VRP to it. If you look here, the implied vol is actually pretty elevated, but gold's kind of funny. It's up. It went up 10% in a month, right? 10% in a month is a more than 2 standard deviations on what its vol looks like. So if you sample vol daily, it's like 15. It's less than 15%. but it's 1 month move. If you sample over a longer period, which kind of basically says it's trending, right? If you sample over a month, the move has been several standard deviations of that vol. And then if you look at over the last year, that's true as well, right? Like gold, let's see if I'm just going to pull up GLD on a 1 year chart. Yeah, your 1 year chart of GLD, it's up 36 point, up almost 37% in a year, right? And on a 15 vol. So, a 1 year standard deviation should be something like 15. And in the last year, it's up multiple standard deviations. So the vol works pretty well, or has been working pretty well in gold as like sort of like it's pricing to it's pricing to the dailies pretty well, but it has been the case that it's just kind of all move when the moves are all autocorrelated. That's the way it's been. So the daily sampling of the vol is going to look much smaller than if you sampled vol over longer periods. So the vol is much higher if you sample over longer periods of time. And in this case, I was just buying teenies. Like if you go over here, you're in a high vol percentile. Your steepness is actually elevated. So I didn't want to go that far out in time and buy vol. So I actually picked April teenies, and I'm sure I'm wasting money here, but I bought $250 out of the money puts in gold. So they're just a super levered shot. You're paying, I think I paid something like 18% vol for them. 18% vol for, I don't even know what the delta of these puts is. I'll take a look. Sorry, I'm looking at it in not the easiest way. All right, gold. Got to go way down here. These things are going to be zeros. Yeah, these are that's funny. 2650 put. They're even more. They're like $300 out of the money, these things. Yeah, these are less than 5 delta. So this is just a shot on there's a snapback in this risk. If any of this risk stuff pops up, and gold seems to be going up no matter what, and this is just taking a shot on the market kind of halting, turning the other way. You're buying a 5 delta put for 18 vol seems completely reasonable to me. And it's also, I had bought silver a couple weeks ago. It's up a bunch, and I'm like, you know what, I'm kind of cool with just owning some of these puts that are just super levered, but I pretty much expect these to go to zero. But going back to this thing, yeah. So your vol is elevated. You're near dated. I'd rather buy the near dated because it's not as steep. And then if I share here, actually, I didn't even look too much like how's gold moving compared to the implied relative to the realized. Let me share that one. I'll go back to that. So gold over here. Yeah, so gold, that's funny, right? It's like gold. Well, this is not including today's move, but the It's not including today's move, but gold's VRP is actually pretty fat. The implied vol is well above the realized, but the realized does have room to kind of pick. Again, today's move is not in here, but like it does have room to pick up, right? It's your realized vol is only in the 40th percentile. Most things are moving at kind of a higher percentile of their own histories for realized. So there's some risk premium baked into these things, but it's also not realizing so much. And the vols are up today. Actually, let's go down here. Let's actually look at GLD. By the way, I didn't execute this in GLD. I traded him in the futures options. So yeah, it's kind of VRP is kind of in line with little high relative to that realized vol percentile. And if we look at this thing, you can see the vols are elevated across the board, right? Your median vols are sort of this yellow line, the green lines. This is again sampling at various periods. So your 7-day realized vol, the median 7-day realized vol is 12. That's actually in line with what you're realizing. Again, not including today. And then your whole implied vol term structure is elevated. This scale is just super tight. So all the just this small variation is kind of popping out. And this is 180. This is doing an interpolation. So I'm not sure which one is interpolating between, but yeah. Anyway, so yeah, gold vols look kind of elevated, but I'm buying less than 5 delta stuff. Vega is not such a vol is not such a concern on these things, and I didn't even look at the skew when I bought them, but 10 delta put. Let's see, these are closer to like 60-day 10 delta put. Yeah, actually, the skew is actually a little bit. No, it's come in here. So it looks kind of like middle of the road, but the skew on the 10 delta, it's kind of noisy. 25 delta put. Yeah, it looks like the put skew, like the 25 delta put skew, has been increasing relative to the at the money vol, also on the rally. So that's also kind of interesting. Yeah, it's usually bigger discount than it is right now, and now it looks like pretty flat. Actually, tiny premium to the puts. That's pretty flat. 1%, 1% of the vol, not a one click. So it's basically zero. Anyway, so yeah, just sharing a couple trades I did, and then like I said, I traded those in GC and not GLD. And looking at the watch list that I have, yeah, the metals are the things that are up. So I sold deltas in these, bought deltas in these, and also sold deltas in these. But okay. Anyway, just wanted to share what I was doing today. And yeah, if I got the one thing I got to work on, maybe I got to talk to I got to talk to somebody about like getting better execution on the, not necessarily getting better execution, just executing better, lining up all these things and trying to work with all orders and all that on IB. And yeah, I want to have a better, finer control over what I'm doing. And it doesn't necessarily have to be algorithmic, but I would just like to have a better interface. So I'll try to bug people on Twitter and see who can help me with that. All right. Thanks for checking us out.